As you give your SWOT analysis of what you're focusing on for the rest of the year, let's start with the strengths here. What are some of the strengths that you see in the current market?
Yeah, so look, I mean, I think the strength that the market has in regards to having a year-end rally is the fact that the recession is going to get punted to next year, in our opinion. And there's probably been a lot of money managers and investors that have really underperformed due to the beating that they've taken in certain sectors like bonds and whatnot. So you could see a flow of funds pour into the equity markets and get that Santa Claus rally that so many are accustomed to seeing. And I think there's a likelihood that we could see that. Short term, I think we have more downside pressure to go due to some of the economic data and inflation data we're going to get over the next couple of weeks. So I expect October here to be pretty volatile. But again, if we can get through that noise and get through the Fed, I think there's a high likelihood that you'll see the markets rally at the end of the year.
And Eddie, I want to talk weaknesses here. I mean, we already started to see some cracks, especially for the consumer, and then we're going to have student loan repayments kicking in as well. What do you see as the biggest weaknesses that perhaps the markets aren't really pricing in correctly right now?
So look, the biggest thing that I am very concerned with is the cost of capital, okay? Rates are staying high, and this market is not going to get any direction to the upside until interest rates calm down. I mean, look at the bond market. I mean, I think it's safe to say that we've seen a crash in the bond market. And you look at the returns over the last 2.5 years, if we're negative again this year on long-term treasuries, that'll be 3 straight years of negative returns on long-term treasuries. I don't know if that's ever happened before. So this cost of capital, in my opinion, is going to be a real problem, and ultimately is what's going to put us into a recession next year. And so there's a lot of weakness there because I don't think that's fully priced in. I think there's still a lot of folks that really think the Fed's going to be able to navigate a soft landing, but it's math. And when you look at the cost of capital and families that have to refinance debt or have their floating rate loans that have gone 2 and maybe 3 times by the time we get to next year, how is it possible that these companies and families can continue the same amount of discretionary income? So ultimately, the unfortunate reality, in my opinion, is with inflation staying sticky high and possibly accelerating, and some needing rates to come down and inflation to come down, the only way that's going to happen, in my humble opinion, is a recession. So again, we think you could get a rally at the end of the year, but that would really be a trade for us because I would be concerned going into next year.